supposed to register with us. Since they're unregistered and they're still doing it, so they're breaking the law. So obviously our regulated entities cannot have any association with them because they're breaking the law. The second is, irrespective of whether they are registered or unregistered, if they are making claims on performance or in terms of portfolio performance, their service performance, etc., unless it is specifically provided for them to be able to give that information of performance, if they are making claims without that approval, then again they are breaking the law, and therefore again our regulated entities cannot associate with them. So the basic principle here is, what you cannot do directly, right? You cannot break the law directly. You cannot do indirectly by associating with people who break the securities law, right? So that's the thinking behind this. Now, naturally, there is, there needed to be certain provisos and certain carve-outs that we needed, because as part of our public consultation, we received a lot of feedback. And as you know, we take the feedback very, very seriously. So a couple of things which we have done is that if there are people who are exclusively engaged in investor education, but what that means is, directly or indirectly, they cannot be playing the role of investment advisor or research analyst. And of course, they cannot be making any claims of return. So you cannot say, I'm doing education, but I'm claiming that my students make 5 crores a year. So somebody who is doing pure education, not giving specific securities advice and not making any claims of performance, such people are outside the purview of our regulations. So our intermediaries and other people can freely associate with educational institutions and people who are doing that. The second is that there are some platforms, and we have had very constructive discussion over the last many months with some of these platforms, where they have demonstrated to us that they have the capability, both on a proactive basis and on a curative basis, to address the issue of people who are breaking the securities law. So if there are unregistered people who are putting content on their platform, or if there are people who are making claims about performance and these are all illegal activities, then they have the ability, and they've demonstrated that ability, to be able to proactively deal with such people and also curatively deal with such people. Then such platforms, Sebi can specify or notify. And then what will happen is that our intermediaries and other regulated entities can freely associate with people through such platforms without any fear of breaking our laws, because we are notifying that yes, the platform has mechanisms, and therefore, even if, let us assume on a random basis, some random case slips through, which is otherwise illegal, the intermediary will not be held accountable, because we have notified that platform as people who are taking adequate measures to prevent wrongdoing, right? So this is the first proposal. And of course, the responsibility of ensuring that they don't deal with people who are doing illegal work will be on the regulated entities, because those are the ones that come under us. The second area that the board approved today was in respect of the voluntary delisting. We had discussion on this some time ago, and we had mentioned to you that the board had asked us for some data, which we presented to them. And therefore now this matter has also been approved today. And there are numerous elements of ease of doing business here. The first is that the fixed price process as an alternative to the reverse book building process will be permitted. Here, the requirement is that the minimum price, which has been determined as the floor price under the delisting regulations, over and above that, a minimum of 15% premium will need to be offered if the promoter wishes to go for a fixed price process. So this is an additional flexibility over and above the reverse book building process. The second is that we had seen that there were difficulties for investment holding companies to be able to delist because of the holding company discount and other related matters. So we have now facilitated that through a scheme of arrangement, they can do selective capital reduction. And what this will mean really is that they will be able to pass on the benefit of the encashment of their holdings to the extent that they are holding liquid shares, listed shares, to their investors. And the requirement is that at least 75% of such companies, their fair value, should be directly in um, listed companies, right? So not every company can declare that I'm an investment company, provided that 70% of their fair value lies in listed companies, then they can avail of this. So this is the second flexibility, a new route for delisting, which has been provided. Uh, in all of this, if the investment company is regulated by another regulator, naturally they would need to comply with the requirements of that regulator as well. The third flexibility that is being given is we are making the counter offer mechanism in a delisting process much more flexible. Earlier, the threshold for making a counter offer was 90% subscription. We have reduced that to 75%, provided that at least 50% of the public shareholding has been tendered. Okay. So this is the third flexibility. Of course, needless to say, the delisting process will succeed only if finally the acquirer reaches 90%. So the final vote still lies in the hands of the investor, whether they want this new acquirer to reach that threshold or not. The fourth area was the introduction of adjusted book value as an additional parameter for determining the floor price. So earlier, the book value was only a parameter that we reckoned for illiquid scripts. We are now introducing that for liquid scripts as well. When I say liquid, I mean frequently traded. Um, However, there has been a carve out which has been done for public sector undertakings. The reason for that being that very often the public sector undertakings have certain assets, particularly land, building, and other things, which are not freely transferable. And therefore, while their value in their books may be X, these properties are not freely transferable, and therefore it would be inappropriate to put that as a minimum value for the valuation. The third thing is that this is more operational, but the reference date for computing the floor price has been changed from the existing requirement of the date of board approval to the date of initial public announcement. The whole logic being that this is the date when it gets crystallized, and we want the undisturbed price to form the basis. The next proposal is an ease of doing business, and you would have seen that we have a number of proposals which went to the board today on ease of doing business. And the reason for that is that we had, as many of you might recollect, we had created 16 different working groups for different stakeholders of the capital market ecosystem, with the mandate and the terms of reference that tell us what is it that you would like from the perspective of ease of doing business. So many of those working groups have come back to us now, many of them with interim reports, some of them with final reports. So you should expect to see a whole stream of proposals which are really reflecting, Sebi coming forward to do that ease of doing business for multiple stakeholders. So the first big set of such proposals went to our board today, and so you will see that reflected in the next few proposals that I'm going to talk of. The first is we had a additional disclosure framework for FPIs. This was in August 23 circular that we brought. This was in the context of concentrated holdings in a single group or very large FPIs, and we required them to make additional disclosures. There were various exemptions given. So we are adding one more to that list of exemptions, which is university funds and university related endowments, which meet certain criteria. The next ease of doing business is in terms of the issue and listing of non-convertible securities. So basically, debt securities, bond issuances. Here, the whole thing was being driven by uh, a desire to be able to put money into the hands of the issuer as soon as possible. So, to streamline the process, because we've had so much automation in our market ecosystem and in the payment system in the country, that there is no need for us to continue to have timelines which are outdated. So, in order to facilitate that, numerous things have been done. Simple things like the period for seeking public comments. So, if the issuer is already an equity listed company who makes regular disclosures in any case, then there is no requirement for the debt issuance to be open for documents for public comments for 7 working days. So, minimizing that. Reducing the minimum subscription period from 3 working days to 2 working days. And as we did in the listing of IPOs, where we moved the time for listing from T+6 to T+3, which has worked exceedingly well. There have been no problems at all. The ecosystem has really responded well. So, this is now going to be an optional facility available to the market for a period of 1 year. So, you can still choose to go with a T+6, or you can choose to go with a T+3. For a period of 1 year, this will be optional. After that, the T+3 will become mandatory. Also, some other, smaller reforms like, reducing the bulkiness of issue documents, and saving on advertisement costs. So, allowing window advertisements for issuers containing a QR code or a link so that people can see the full advertisement there. And lastly, as part of this entire T+6 to T+3, which is on the lines of equity IPO processes, similar to that, therefore, for investments up to 5 lakhs, which are being made through intermediaries, the UPI will then be the mandatory process because all other processes require manual intervention and delays. So, in order to avoid that, we are streamlining this on exactly the same lines as equity IPOs. The next one is also related to ease of doing business for debt issuances. Um, Again, minor things but important to the issuers. So, for instance, the promoters. Right now, the document requires their PAN number and personal address to be kept in the offer document. Now, clearly, this is a privacy issue. And therefore, this will now be deleted and only kept with the exchanges as a matter of record. Um, a couple of other smaller things to align timelines, etc. Largely operational, but with a focus on ease of doing business. The next one again is for ease of doing business in the area of REITs and InvITs. A number of small proposals, um, largely going by the fact that the timelines need that the industry needs flexibility in timelines for doing various things. And if the investors are okay with it, for instance, minimum notice period for meetings, etc., there should be no reason why the regulation should stipulate anything more. Also, we are providing for an e-voting option and an option to attend meetings through the electronic mode to all the unit holders for all unit holder meetings. So we believe that, COVID times taught us this, gave us this opportunity to learn, and therefore we should carry it forward. And so REITs and InvITs will now mandatorily be required to provide an e-presence and an e-voting option. Also, you've heard us say this before that the REITs and InvITs now are at a certain stage of maturity, disclosure, and governance that the regulator feels comfortable with. And therefore, with all the risk management measures which are in place for these instruments, we now believe that dropping the trading lot to 25 lakhs would not be inappropriate. And we are comfortable with, these obviously not retail investors, but high net worth investors coming in and at this reduced amount as compared to earlier, which was 1 crore? 1 crore. Um, Also, given, as I said, the automation in the entire ecosystem, we have revised the timelines for payment of distribution to the investors for their payouts to 5 working days from the record date. This is compared to 15 days from the declaration of dividend, etc. So this is again a efficiency and optimization process which will benefit the investors. Next one is in respect of AIFs. We have two proposals which got approved by the board today. The first is again ease of doing business, where in the past it was not clear to the industry that they were permitted to borrow short term funds in order to meet shortfalls when they call for the money from their investors. So we are making it explicit that yes, we have no problem with that, but along with the guardrails that are necessary. So, for instance, ensuring that if one of the investors out of 20 has not honored the call for funds and they are needing to borrow in order to make the investment, then the interest cost of that borrowing must be borne by the investor who has not paid. It cannot be borne by all the other investors as part of the scheme. So that is a safeguard for them, and also to ensure that investors have a level playing field and different drawdown schedules are not offered through leverage routinely. There is to be a cooling off period of 30 days between every 30-day borrowing. And also, this is to be exercised only as a last resort. It cannot be routinely used in order to give preferential treatment to certain investors. So the industry was quite pleased with this proposal because, as I said, they didn't know that our regulatory intent was to permit it, so they were quite happy to hear this. In terms of large value funds, we have seen that there was a risk that some of these large value funds had the risk of becoming permanent capital vehicles, which becomes a problem on account of numerous things. First of all, the investor doesn't have clarity on his investment horizon. Then there are delayed disclosures and recognition of bad assets. Liquidity becomes a problem because if the fund is continuously extended, then the investor has no exit option. And also the performance of the fund managers is not reflected correctly. So in order to take care of this, now a cap is being specified of 5 years. In terms of the funds which are already in the market today, we have found a very elegant solution to deal with it. So we basically said that you need to align with the new rules within 3 months, but you have the flexibility in modifying your base tenure. And so, for instance, if you had said 7 years plus 7 years, right? Base is 7, extension is 7, but now you can't do 7 as the extension, you can only do 5. So now you'll say 9 plus 5. So you're still okay, right? You have the right to do that so that none of the existing funds are put to any inconvenience. But going forward, over and above your base tenure, you can extend only by 5 years. Then we go on to another very interesting proposal related to investment advisors and research analysts. Um, we are facilitating what we call a safe space for investors to be able to differentiate between regulated and unregulated entities. This is a purely optional mechanism for the registered entities. It's not mandatory. But what it will give is an ability to an investment advisor to differentiate himself or herself from unregistered entities, because the payment mechanism that through which the investor is expected to pay the fees for investment advice will be only a couple of designated entities who will facilitate this safe space. So if the investor is paying through that safe space, he knows that he is dealing with a registered entity, and he knows that the payment channel through which he's paying is a safe payment channel. So we believe that this will over time get traction, because the trust in the system will improve, and that the good players in the market who are registered good intermediaries, they will use it as a differentiator and advise their investors to really come through this route, because then they can get a lot of comfort that they're dealing with the right set of people. The next proposal is related really to the market infrastructure institutions, doesn't directly impact the investors, but this is basically a set of criteria, basic criteria on the basis of which the market infrastructure institutions will be assessed by external evaluators once in 3 years, and every year internally by themselves. The purpose here really is that a recognition of the fact that market infra institutions are not like any other normal company or listed company. They play three very different roles. The first is the provision of what is practically public infrastructure. It is in private hands. These are private entities, often listed, but it serves the purpose of being like a public infrastructure. So there's a huge responsibility to ensure that it functions like a public infrastructure. The second is that they are first level regulators, so they must perform the role of being first level regulators. And the third, of course, is that they are expected to be running an efficient business in a nice, efficient, cost effective way with a lot of innovation. So, all of these three aspects of how we expect a market infrastructure institution to be run is captured in this framework. And with the suitable weightages being given to all of these factors, so that no one aspect of the functioning of an MII skews the way in which they function. The next proposal is cyber security and cyber resilience framework, which has now been will be notified by Sebi for all its regulated entities. The two important aspects of this: number one, we have taken a risk-based approach, or a graded approach as we call it. We have defined 5 categories of regulated entities based on their span of operations, number of clients, trading volume, asset under management. So basically, what is the impact of this entity were there to be a cyber attack or a technology resilience problem in them? So these 5 categories are, of course, the MIIs are right on top. The qualified entities, like qualified brokers, we have qualified stockbrokers, we have qualified RTAs. So they come into the second category. Mid-size, small size, and self-certified regulated entities. Now, the second interesting aspect of this is, and this was based on market feedback to our consultation paper, where we talked about data localization. The industry has requested us to do a data classification and localization. So the regulatory data must reside within our shores so that the regulator has instant access to it. However, certain types of data, which we consulted with our high-powered advisory committee on cybersecurity, some of that data we are now calling more like IT data, and that we are giving a dispensation that it can be offshore, because many people have cybersecurity monitoring globally rather than locally. So we felt that it was perhaps suitable to do that. But certain guardrails have been put in place. For instance, within 48 hours, the data has to be brought on shore, etc., etc. The last part, which is not here, but this was actually implemented some time ago. It was not made mandatory. Now, for a certain category, it is being made mandatory, the smaller entities, which is that there is a market SOC, SOC being the Security Operations Center. So as we know that smaller entities find it very hard because this stuff is expensive. Cybersecurity protection is expensive. So we were not wanting our smaller regulated entities to be disadvantaged. And therefore, we created a concept of cooperative and collaborative cybersecurity creation. So there will be at least 2 entities in the market ecosystem that will offer this securities of market securities operations center, and the small entities can simply hook up to them and get that protection. It's a base level of protection and the cost is very, very reasonable. So let's say that a small broker has only 5 nodes in his system, in his office, for which he needs protection. So that will only be in the region of 50 to 70,000 rupees per annum. And if we, see more and more traction, and if this cost can be brought down further, that would be even better. But the objective is that our market participants, in order to be able to protect the data of their investors, and in order to ensure that they are up and running and not susceptible to cyber attacks, the protection that they need should be available in an affordable fashion. So the market SOC is really going to play that role. Another item which is not here in this sheet, but I'd like to share, is again related to our market infrastructure institutions. Um, we have right now a concept called financial disincentive, which is meant to trigger whenever there is a technology lapse or a technology disruption amongst the market infrastructure institutions. It was an automatic financial disincentive. Earlier, it was designed to trigger on both the institution as well as the key personnel, the CEO, the CTO, etc. It's been some time since that was initiated, and on review, it was felt that while the financial disincentive should remain on the institutions, on the individuals, it should not be an automatic penalty, because the role of the individual, see, for the institution, it's a yes no answer. Was there a lapse? Was there a failure? Yes, no. But when it comes to an individual, the a certain amount of judgment has to be applied as to whether that person had really done his job and had done everything in his power to make sure that the systems stay up and running, or was there a error of omission, commission, whatever it was. So judgment needs to be applied, and therefore we will not have an automatic disincentive system on them. So that will fall off now. Of course, if there is really some egregious action or inaction which has happened, then SEBI is always within its rights to take other action. But this automatic application of financial disincentive will no longer operate. Lastly, the annual report of SEBI, which is placed before the Parliament, was also approved by the board for placing before the Parliament. And this is not. It's not practical. Okay, sorry. One more aspect which has been hotly discussed in the media is on the entry and exit of scripts in the FNO segment. So the board today approved the new criteria.
It's not in the press.
We will give you a copy. We'll give you a copy. So, Muru, can you get this photocopy?
Extra copies.
Not the top part, just the text. Just the text.
Could you finish the sentence? New criteria for
Suspense.
For FNO.
we'll live with the
Okay, for FNO stocks. So first, in terms of the regulatory thinking behind it, and then the specific criteria, how they are changed, we're going to give you the details. So that's what will be on that sheet. But first, the regulatory thinking. The regulatory thinking is in two parts. The first is that in order to ensure that there is a healthy linkage between the cash market and the FNO market, many years ago, we had brought in a regulation that there will be physical delivery of open positions on expiry. Right? That was the first step we had taken in that direction. The second step that we are taking in that direction is now today to say that the criteria of which stocks will be permitted in the FNO basis the criteria of how their shares behave in the cash segment. We need to adjust those parameters because they were, in 2018, they were set in 2018. And obviously from in the last 6 years, the market has grown and the whole volume has grown, size has grown, everything has grown. So those parameters which we had set 6 years ago are no longer appropriate. So in line with the way in which the market volumes and value has grown, we have changed those parameters in terms of eligibility to enter the FNO stocks. We'll give you the specifics very shortly. The second thing that we are doing is to introduce or extend the concept of product success framework. So, as you know, in our indices, we have a product success framework, which means that the exchanges can introduce a new index for FNO trading. But if volumes do not pick up and it is not a success, then after a certain period, it has to be withdrawn. Why is this? Why is it that we have this rule? Is because we know that if there is a contract available in the market which has very thin volumes, it is very, very vulnerable to manipulation. The amount of money you need to manipulate an illiquid contract is very, very small. So therefore, it was imperative that that same protection which we have given on the indices side should also be given on the stock specific FNO. So we have extended the concept of product success framework to stock specific FNO as well. So if the trading doesn't reach a certain minimum level, which means the trading is too thin, it is very vulnerable to manipulation and therefore it will need to exit. But this exit will only be after a minimum period of 6 months. So for 6 months, the question is whether the volumes are picking up or not. So there is a glide path to implementation of all of this. You will see that in the details that we will circulate to you. And so with these two changes, there will be some differences. There will be some stocks that will go out of the list and some which will come into the list. You see, we can only backtest based on the past data, but obviously these will come into effect only later. So I think we would not like to do that because then it's speculation as to whether those are going to stay or go or come, because nobody is going out today or tomorrow. We're going to wait for that 3 month, 6 month period and watch the underlying and watch the FNO volume, and only then will there be an entry or exit. I've been advised by Mr. Anant Narayan that it would be inappropriate for us to talk about that. Let me put it this way. The total number of stocks actually goes up by a handful.
So if we do the back testing,
Goes up by about 5 or 6.
if we do a back testing as of now, it's 182 currently. It goes up a little bit marginally. There are some which exit, some that come in. It's not a very large number that goes in and goes out. But the caveat we want to emphasize is we don't know. It's as of today. So the PSF, as Chairperson just mentioned, becomes applicable only 6 months from now. So we can't apply today's criteria we don't know what it will be 6 months from now. Likewise, for the existing stock, the 182 stocks, we're not going to apply the exit criteria right away.
Yeah.
We'll give them 3
3
months
months.
before that starts to kick in. But as things stand, if you do a back testing today, it goes up marginally, reflecting the fact that we've not done too many entries over the last few quarters. Exit
Yeah.
to kick in.
For existing.
It's the same process which is followed today, which is every month they do an exercise to backtest and see whether there's fresh entry happening or exit that needs to happen. So the same criteria which will continue, no change on that.
No, process is same,
Process
criteria
same.
is
The
different.
criteria has been obviously marked up given that. I'm sorry?
3 months post you issue the circular.
That's right.
Yeah, circular will come quickly. So 3 months. So roughly you should expect that nobody is leaving in a hurry as per the new criteria for the first 3 months. And for this new extending this concept of product success framework, nobody is leaving until 6 months.
from now. By the way, just to add, this product success framework by itself will not cause too many exits.
Yeah,
As
it's a
things stand
handful.
right now, it's a complete handful. Of course, we can't speak as to what will happen 6 months from now. It's more like a safety system being put in place
For the future.
to ensure that there is adequate liquidity in every single stock derivative.
Even for PSF, I mean, whatever
Handful.
Really handful, as in
Is it as per the discussion paper that came in?
Hmm.
You mentioned product success
Yes,
framework in
yes,
that.
yes.
Have you changed the framework or is it the
There
same?
is one
we will
technical,
circulate.
yeah, we'll circulate it. There was one technical correction we made because of the way that the market computes buy and sell volume. So should you count buy plus sell, or you should only count buy or only count sell? So for that, on account of that,
That's right.
we've made a change.
Can I
Uh,
read out the criteria, ma'am, very quickly? So the criteria as far as the top 500 stocks in terms of average daily traded volume as well as market capitalization, that doesn't change. That's exactly identical as before. The median quarter sigma order size, which was 25 lakhs previously, is now 75 lakhs. The market-wide position limit now will stand at 1,500 crores. So again, in sync with the movement in the market cap since 2018, 1,500 crores. The average daily delivery value is now being put at 35 crores. That's gone up from 10 crores because the traded volume and the delivery volume has gone up by over 3 times between 2018. That's right. And 10 to 35 crores. Now the PSF conditions very quickly. The first one is identical to what you have on indices currently, which is 15% of trading members or 200 trading members, whichever is lower. That's identical to what you have on indices. Again, what is identical to indices? Trading on a minimum of 75% of the trading days during the review period. Average daily turnover of at least 75 crores during the review period. This is what Chairperson mentioned earlier in the discussion paper. We had mentioned 150 crores because we had taken two-sided volumes. Now we are taking one-sided volumes, and therefore this number is 75 crores. And average daily notional open interest of at least 500 crore. So these are the four criteria that we're putting up for PSF.
The applicability, as you said, that will be notified, and after that.
That's
Why
right.
have you taken a notional open interest and not the premium of open interest? Because the maximum open interest comes to option.
So we'll come to that subsequently. As of now, we're not changing what we have in the PSF that we have for indices. We've kind of copy pasted that into the single stocks as well. If there is a larger change to be done, that will be done separately in terms of the way we measure metrics, etc.
Something go for said that the net addition would be very small about that stocks. But is the churn very big?
Not very
Not
much.
very big, no.
Couple of dozen.
Yeah.
Couple of dozen. As in 24, in the region of 24.
Yeah.
2 dozen, couple of dozen. You all worry too much.
So actually, the number of stocks, just to reiterate, should go up based on today's, backtest.
Backtest. So right now, what we are expecting is that the two exchanges are likely to do it. No, the fee collection is a mechanism which, as you know, BSE is the administrative body for IAs and RAs. So it is planned that that will be certainly one of the entities that will be designated for that. Most likely, the other set of people who have shown interest, and as you know, we generally prefer to avoid monopolies in any function. So we like at least two players in every function. So most likely, the people who have shown interest and are almost natural entities to do that is the MF utility. It means that there will be an agency. The exchanges and other depositories and everybody will send us two names of who they think are non-conflict entities who are capable of doing that assessment. They will send us a couple of names. We will select one. And based on the detailed parameters that have been laid out, and these have been laid out in consultation with the MIIs. So their industry standards forum, we have, as you know, a very good system of industry standards forum now. So their forum has sat together and designed this for themselves in consultation with Sebi. So we are also very comfortable with it. So it's a very detailed set of parameters where they will undergo an assessment every 3 years externally. No. We shared additional data with the board today, on the basis of which this proposal was approved.
I have some questions on GST, if I may ask. So specifically, sorry. So specifically, could you offer an illustration on how this optional or alternative to reverse book building will work, and what kind of companies or
It's available to everybody.
correct?
So anybody who says that I would rather go for the fixed price option, so basically the floor price is still computed as per the Sebi regulations. You add another 15% on top of that.
Yeah.
Above that number, you can come to the market and say that here is the offer that I am making and I want to delist. And if you reach the threshold of 90% with that fixed price offer, then you can go ahead.
That's exactly the question I in fact had.
Hmm.
That the threshold of 90% has not been easy to reach,
Hmm.
even with sort of high price tags in the reverse book building
Hmm.
process.
Hmm.
So, what kind of company is expecting to reach it with a 15% premium to current market share?
How did you arrive at 15% premium?
So that was one of the data sets that the board had asked us to look at, and we looked at that data and we looked at the past cases that have been there and what kind of premiums were there which were given at that time for the successful issuances. And basis that, there was a decision made on this 15% premium.
Because the voting requirement doesn't change, right?
The threshold doesn't change.
Correct. So I'm just curious. I mean, companies wanted a fixed price mechanism.
That's
because
correct.
They said they were being held ransom by small groups of shareholders in the reverse bookbuilding process.
That's
And
right.
that being held ransom was that they would not approve. And they were large enough in number to stall the delisting
Right.
because there would be 90% acceptance at a certain reasonable price.
Right.
So now, how is this going to work? If there are small groups of shareholders holding companies to ransom there, why would they agree to a 15% premium?
So the question is, I would break it up into two. First of all, this is based on what we have understood from our advisory committee as to what works for them, what doesn't work for them, and having to balance the fact that finally the decision should be with the shareholder. So that is the balance we have to strike. Our understanding from the market is that the process of reverse book building and the fact that it can be taken, that the final cutoff can be taken to stratospheric levels, is what is bothering them. And even there, by the way, as I said, we have made some liberalization so that they can offer a, what is it called? What price? Revised price, etc., at a much lower threshold of 75%, etc. So our understanding from the market is that this would be a useful tool, helpful to them. Exactly how they expect to overcome cornering of shares, um, we believe they know the market better than us.
How will you come arrive at fair value of the company from a shareholder's point of view? Of course, there is one section of the shareholders who may be cornering, but there are other shareholders who would like to get a fair value while.
That's right.
So the SEBI formula may not be giving you the fair value.
In which case, you don't surrender your shares. See, the final vote lies in the hands of the investor. So if you think it's not a fair price, despite the premium and everything, you don't surrender your shares. They'll not get to 90%. They'll not be able to delist. So they have to make it worth your while.
Any explanation for why you thought this would be more, that this would work when everything else has worked? I'm just curious
I think there is, you see, the request for a fixed price offer has been there for a long time. This is not the first time that industry made this request. So, at the end of the day, an additional option is always gives flexibility to people. Is it going to be a roaring success tomorrow from their perspective? We don't know. But this is something that they wanted.
I guess you need to take a little bit of consideration.
So
Which they could do with even RRB actually, because they have the option to do a revised price there as well.
No, only if they hit 90%.
That's right.
You couldn't do a revised offering without. No, you have to opt for one.
Got to opt for a fixed price, where the minimum is 15% above the floor, right? Or you can do a counter offer later on.
Considering on the last question, the success rate will be less for this. So will there be pulling off period before they come up with another?
I forget now. There had been some discussion on cooling off period. No? Do we have somebody here from? Yeah, yeah. There had been a discussion on cooling. I can't remember
It's
that.
either 6 months or a year. We'll confirm.
I can't. We'll confirm that.
Yeah.
We will just get somebody from CFD.
You permitted, SEBI had permitted a short while ago, automatic, not automatic, that liquidity listing to anything. I'm just wondering, does this fixed price mechanism fit into that as well as an option? That if you want to acquire a company and then seek to delist it, as part of that, process, will fixed price be an option available then as well?
The question of acquisition, change of ownership, and delisting conceptually is remains the same. So whatever concessions were given over there to say that if your intention is to change ownership and delist, then certain concessions were given. So what is the mode of delisting is not material because both modes of delisting are okay for us. So whether you follow this mode or that mode,
So this will be available even for that?
it will be available because the mode of delisting is not in question here.
And there was another thing in the consultation paper, which was with respect to the reference date being the date of information to the stock exchange or the board meeting date. Nothing has come from the reference.
Now it has changed, right?
Modification of the reference date for computing floor price. Yeah, that's what I said. That not from the date of the board approval,
But from the date of
public
announcement.
announcement, so that it's an undisturbed price.
Ma'am,
Ma'am, question on this delisting of
One sec, I'll just take that question. Yeah.
I just have a question on the sales rates that you have created for registered investment advisors. One is that you made it optional for them to choose this sales rate. Earlier, I thought there was an idea where it would be mandatory for all the registered investment advisors.
That is correct.
Reason for making it optional.
So, as you know, we do public consultation with a completely open mind. So, when we say here is a proposal and we think it will be good to make it mandatory, and people say no, we don't think so, we are happy to give the market that leeway and that flexibility. So, those who wish to use it as a competitive advantage to give comfort to their clients are most welcome to. Our job is to make available and facilitate things. Beyond that, we are quite happy for them to make that choice, and it's early days. Let's see how the whole thing gets traction. As you know, there are many things we do on a glide path basis.
So initially, a lot of hesitation was there from the IMF initially about this proposal. So after a lot of consultation, how did you bring them on board? Have you brought them on board?
Yes, there is. Kamlesh?
So now after we explained them the advantage of this particular provision and our proposal that we have considered, a lot of people have shown interest. Now we don't know how many would opt for it. It's too mature to predict that. But yes, that initial resistance was overcome with the help of discussion, explanation, and now that it is optional, they can view their pros and cons. That what are the advantages? There are certain advantages, right? That if you adopt this mechanism, the investor who is seeking your advice knows that I'm dealing with the right person, and the kind of illegal activities that are going on right now, he's sure that he's not going to fall prey to such wrong activities if I'm dealing with this particular person because he has that mechanism in place to safeguard my trust. So those are advantages. So I mean, we will see that how it gets traction.
Is it live already?
No, not yet. I mean, it will become live.
The systems are under development, so they'll come live soon. Soon. It's very small. It's some 4,000 rupees per annum or something. 4,000 rupees per annum. So that's what we said, that they'll be offered most likely by BSE and by MFU, Mutual Fund Utility.
Ma'am, with respect to the investment holding companies, once the investment holding company distributes its shares, the underlying, and the cash instead of land and building, will it cease to exist, or because it's not stated clear in the release that how the delisting works? Once after the distribution, they can delist, or once it distributes the the shares, you can do a capital reduction and just take out the list account.
Yeah, correct.
Technically.
If all the shareholders, the public shareholders, have been paid either cash or the value or the underlying shares, it's over after that.
So you can reduce the
There
capital.
are no more public shareholders left.
Or the criteria of normal delisting which you modeled.
Yeah. This is an option available to investment holding companies. You don't have to go through this route.
And
It's an
another-
option.
Another clarification with regards to the FNO stocks mechanism. So if hypothetically the circular comes after 2 weeks, so the criteria of entry starts from the third month, right?
No, criteria for exit starts from the third month. Entry will start right away.
Immediately. Okay.
Ma'am, just wanted some clarification on a couple of things.
Sorry, who's I can't. Oh, here.
Broke your heart.
No, I was actually wasn't in the
Line of sight.
exactly. Just wanted to understand around FNO, there have been a couple of reports which are out. One thing is that is there a committee which SEBI formed to sort of ensure an orderly progression of the FNO market? What is this committee? What is going to be the responsibility of this committee? Second thing, there was recently one report as well which spoke about there being some examination mandatory for trade into FNO and all that. I mean, just to understand, is there anything apart from these things also that you're looking at to sort of
Yes.
regulate the FNO?
So, as you know, we have standing committees, and we have one of our standing committees is the Secondary Market Advisory Committee. And obviously, within the secondary market, FNO is a very big segment. So, therefore, under the Secondary Market Advisory Committee, under SMAC, it is quite normal for us to pick up areas of focus from time to time and put up an expert working group or a working group to focus on a specific aspect and then present its report to the main SMAC. So this area of FNO trading, in terms of what more do we need to do beyond, what we've done is a very simple thing, right? Just simply change the criteria proportionate to where the market has gone. So what more needs to be done, what is happening in terms of the volumes, the retail participation, and so on. All of those aspects from all the three dimensions, whether it is that we want to continue to develop our market, we also need investor protection, we also need good risk management. So from a very comprehensive point of view, we need to have a review of this. And so an expert working group has been put together under the SMAC, under the aegis of SMAC, and they will deliberate on this and then they will give their report to SMAC.
Just in addition to that, you would remember that Finance Minister in May had warned about the retail explosion. Then last week, you would have heard on 18th of June, RBI Governor also said, although he said that it is not by domain, it is for Sebi to see the spurt in the volumes in FNO segment. I want to understand that now that you mentioned that the committee report will be submitted, and after that, only any action will be taken, or is there any separate thing which Sebi is thinking or following?
No. As you know, sorry, just one moment. Just got a confirmation on that discussion we had on cooling off period between the two modes, 6 months of cooling off period.
For delisting.
Sorry, so back to FNO, yes, you're right. So as you know, we are committed to a lot of, we are committed to public consultation in everything we do. The only caveat to that is wherever something is of a surveillance nature. So something that our surveillance team does and gives instructions either to the market or to the stock exchanges, those do not go through a public consultation process because they are surveillance concerns in the market that somebody is up to some serious mischief. So apart from that caveat, I would say that on a policy basis, we've constituted this expert working group. It will submit its report to SMAC. It will be deliberated. After that, there'll be public consultation. We will not do anything without that. That is our constant way in which we bring about policy change.
Is there a specific timeline? Is there a specific timeline to this?
I don't think so.
So the working group, as ma'am said, the expert working group has been set up. They will meet shortly. They will come out with recommendations. We will take that to SMAC, and then we'll put out a consultation as
Has
per
the
the.
working group been given a period of time within which to submit
Nothing
the
has been
recommendation?
stipulated. See, they need to have the time to make their deliberations. So,
Sometimes there is committees are given like within 6 months to, sort of come.
So typically the chair of the working group is given a lot of latitude. In case there are certain short-term priorities he or she wants to pick up, we pick them up. In case it's a longer-term report, we give them a lot of latitude.
Now, I just want to understand, I mean, if I were to ask you just in simple language, FNO as a category, of course, it's open for participation from every kind of investor right now. These are largely liquid stocks. We've reached a point where concerns are coming from owners. There's a committee which has been set up in terms of the group. If you had to explain what is the essential concern with all of it with the current situation, how would you?
I think the concerns are on three different dimensions. The first dimension is from which we think that we are in very good territory, but there's always room for improvement. Is there systemic risk in the capital markets ecosystem itself? Right. So, are we running a risk of something that if there is some black swan event, what happens? So, we think that we are reasonably well protected. However, as I said, from a risk management point of view, there is always room for improvement, and so that is one area that we will look at. The second is from a investor protection point of view. We have, as you know, published that research report to say that 9 out of 10 people lose money in FNO, and it is not a small sum of money that they lose. Now, we have adopted an approach of disclosure, for the investors to be aware of the risk and to, then make up their minds as to whether they still want to proceed or not. However, uh, the trend that we are seeing in terms of even the type of trading that is happening. So, concentrated in weekly options, only on the expiry day, in the last 1 hour. Now, these are just speculative bets, right? These have no nature of hedging. These have no nature of, I would say no other nature other than speculation. So the question is now that, what is it, if anything, that needs to be done further from an investor protection point of view? Particularly as, and we have seen anecdotally cases where people borrow money, including by, their parents are mortgaging their homes and everything, and then they are borrowing that money and putting it into this speculative activity. Is that a good thing? It's not a good thing. So, what, if anything, should the regulator be doing on this issue of investor protection is the second area. The third area is also from a larger macroeconomic point of view, that there is a large amount of money which is therefore now going from household savings into what is essentially not productive economic activity. Right? This is speculative activity. This is not going into any capital formation of any kind in the economy. So, what is it that we as a country should also be thinking about at a larger policy level is the third area that one must think about, especially as the proportions have grown. We looked at some data from 2018 to 2024, and the numbers are very, very stark. So, um, in that context, yeah. No, not this. I'll just read out some numbers to you. As you know, we are very data driven. So हम सारे टाइम नंबर अपने पास ही रखते हैं. Yeah. So turnover in index options in premium terms has grown from 4.5 lakh crores in 2018 to 140 lakh crores in 2024. 4.5 lakh crore has gone to 140 lakh crore between 2018 to 2024. This is turnover in index options in premium terms. Overall turnover in derivative segment has gone up from about 210 lakh crores in 2018 to 500 lakh crores in 2024. And the share of individual investors in index options has gone up from 2% in 2018 to 41% in 2024. 2020, FY 2024.
So you are saying that it could be the working group will also think this diversion of money or household savings towards unproductive.
It's a factor. It's a factor. It is not our principal mandate, but it is a factor that we need to keep in mind.
Ma'am, but you spoke about the second larger matters in this conversation. And when we spoke about the part of fact that it's specialized in nature and now concentration of trading coming into retail options. But it's SEBI which is approving the products.
That's correct.
So, so are you going to relook at those products?
And
Maybe
one
we
of them
should.
is, there are a couple of products that are doing very well for some of
Maybe
the
we should.
right? I mean, the zero pay product is.
So, see, the working group has been given a very wide mandate. We have our overall objectives, and this is an expert group. They understand the business, they understand the market, and we have given them a very wide mandate to say what are all the things that you think we should be doing. So they are familiar with what is happening. Data providing, obviously, SEBI provides all the data because we have the data behind it. So all the data that is going to form the basis of analysis and recommendations to the working group will be provided by SEBI.
So you will be open to the space for the finance ministry coming out and putting restrictions in terms of taxation for speculative trading going forward in that sense?
That's well above my pay grade. That is well above my pay grade.
But will you approve that measure?
It's not for us to approve. It's for the parliament to approve.
Start with at least the weekly expiries.
So there will be a consultation process. Please put in all your suggestions and thoughts. Feed them into the process.
Actually accumulated concern area, but on the other hand, this is seen as a success story. I mean, Indians really want the highest in the world. So how do you balance that? And I mean, this is also a great source of tax evasion for the government. So it's like a case of whether one should allow and whether cigarette selling should be allowed.
No, you're right. I think you're very right. After all, even the statutory warning that we gave is like that only, right? On every cigarette packet, smoking is injurious to health.
You can add that also if you want.
So I think the analogy is not wrong. As I said, this is a very wide mandate to the group. And what is equally important is that that's an expert group. It will feed into our standing committee because all policies go to that same standing committee. And then we will see, let's see what recommendations they come up with and what is. Nothing has been stipulated. They need to have, invariably what tends to happen, like I said, even for the ease of doing business working groups that we had, they gave us interim report and then they gave us final report saying this is, low hanging fruit. Let's just harvest it quickly. So this is our first set of recommendations. They may give us an interim report, then they may take more time to give us a final report. These are all the normal ways in which our working groups work traditionally.
What are the top points, as you said, mentioned about the wide mandate? What are the top few areas which is mandated?
I mean, let them do their job, na? They are the experts. Let them do their job. Haji.
This question is coming after a very long time, but the press on this is also But now on that mutual fund total expense ratio, after that, the last discussion that happened was that some more data which was required. Just want to understand, is that now done and dusted and it remains where it is, or does it still exist in the area of consideration?
I think we are shown some stock in listed AMCs. ये छोटा नहीं है यश, हाँ? So, हाँ? Expired. Correct. So this is exactly why I cannot make any statement, because we have so many listed entities. So We had at that time, if you recollect, it was the first time that we deviated from normal practice on two counts. One is that even before we started discussion and deliberation, we put out a press release saying we're going to discuss it and think about it because it's price sensitive. And the second is that the first set of proposals that we made were without co-creation of with the industry, which is normally our way of doing things. We always co-create with industry, but this we did without because it was price sensitive. So those were the two deviations we took because of this price sensitivity issue. So it is precisely for that reason that we cannot share anything further with you. If it comes, when it comes, it will come, and everybody will know at that time.
And one
Another
question on
question.
the influencer part of it. The government spoke about the fact that there is the carve-out for certain industrial entities which are into investor education, and the second one is a specific digital platform who are looking at and collecting or taking action.
Correct.
Can you have you identified those platforms?
Yes, yes. So we will notify them in reasonable time because we're already working with a number of them to try and assess their capability as well as commitment because both are required. As I'm a banker, so we used to say NPAs happen because of the person either does not have the ability to pay or the willingness to pay, right? So a platform may have the capability but not the desire. So it is our job to then assess whether they have both the capability to do preventative and curative, as well as the commitment to do that. So we can notify, we can also denotify. So it's not that the notification is forever.
Who will fund those operations when these entities are into that kind of work as well?
Those platforms, that's their business model.
They themselves staying in the market.
Yeah, those will be.
Government will give in
No, not at all.
My question is on the previous so as there are more and more companies to this year, there are also MNCs that so the thought process that exit also should be easier and these norms don't work will there be further delay and because if a company is listing you would also like have a framework that they can deal through that.
No, correct. See, you've heard us say many times we don't like Abhimanyus in the market, right? So we don't like it when people try and capture investors and don't give them an exit option. Similarly, why should we say that, once you are listed, you can never leave? It's not Hotel California, right? So we are good. This is a rich, vibrant market, and we welcome people to come in here. But if for some reason they need to exit, they should also have the ability to exit.
One more question around what is the thought process of this whole classification of promoters? There are instances where companies have filed their documents and they come back saying that we are all and these guys are not that good at promoter. But how does every approach that? And is there a fixed formula to know whether you're a promoter or
So, the guidelines are there, but as you know, the market can be quite innovative and find ways that are, I would say, technically in line with the regulation, but not in spirit in line with the regulation. Then it is the job of Sebi and its officers to identify that this is not an in spirit compliance and that various other innovative structures have been used to say that we are not promoters. There is actually they're all the nature and character of promoters. So that is our job. When we examine the documents, we examine all of that in detail, and we'll continue to do that. Yes.
So, can you give an example, more example of what is pure investor education versus advice?
Yeah.
One way you do not
Sure. So if you give any recommendation on any specific stock, mutual fund, REIT, bond, these are all securities. If you say buy this, sell this, hold this, that is investment advice. That is also a recommendation in terms of being a research analyst. The minute you utter a specific word, you are an investment advisor or a research analyst. If you're generally teaching people about how does the F&O market work, what is a collar, what is a floor, what is a cap, all those things are fine. That is investor education, and we welcome it.
Ma'am, in the last board meeting, you had approved an institutional mechanism for fund running or instances of fund running which it happens at a mutual fund house. That hasn't been notified yet.
It's at a very advanced stage, and I think we need to give the industry some time to deal with it. I mean, to put in the system. So I think the large mutual funds above a certain threshold, I think it's 10,000 crores, will need to do it within 3 months. And the rest will have time of 6 months to set up all their processes and systems. So that's what will happen. It will happen shortly.
This is after you come up with a formal
After we notify. That's all. Our deadlines start from the date of notification, which should be shortly.
मैम तीन सवाल हो गए पहला ये कि आपने वॉलंटरी लिस्टिंग की बात की रेगुलेशन आगे लेकिन जो मैंडेटरी लिस्टिंग है उसका जो रेगुलेशन है और हम ये देखते हैं कि किसी एक एक्शन में बहुत ज़्यादा कंपनियां लिस्टेड हैं और सबसे ज़्यादा जो मैनिपुलेशन के लिए इस्तेमाल होता है वो उन्हीं शेयरों का होता है तो उनके फ्रेमवर्क को रिव्यू करने का कोई प्लान है पहला सवाल दूसरा सवाल ये है कि बहुत सी कंपनियां जो आईबीसी के थ्रू वो एक्शन के लिस्टेड है बट आईबीसी में चली गई हैं उनके पास वैसे भी उतनी मतलब फाइनेंशियल कैपेबिलिटी नहीं होती है कि वो ठीक हालत में होती जाती हैं उनके ऊपर एक्सचेंजेस नॉन कंप्लायंस की पेनल्टी लगाते हैं तो एक तरह से क्या इसको रिव्यू करना चाहिए कंप्लायंस होना चाहिए लेकिन जो पहले से ही बुरी हालत में उसका पेनल्टी लगाएंगे नॉन कंप्लायंस का तो वो क्या लॉजिकल है और तीसरा सवाल ये था
अच्छा, मैं शुरू करती हूँ, फिर आप सोच लीजिए. कंपल्सरी डीलिस्टिंग में देखिए, एक रूल है, उसके हिसाब से अगर एक कंपनी लिस्ट होती है और उसमें जो भी ट्रांजैक्शंस होते हैं वो कायदे से होते हैं. इफ वी फाइंड, अगर हमें ऐसा लगता है कि वहां पे मैनिपुलेशन हो रहा है तो हम एनीवे एक्शन लेते हैं. आपने तो देखा ही है, आजकल वी कीप यू क्वाइट बिजी, कभी इस मैनिपुलेशन पे ऑर्डर आ रहा है, कभी उस मैनिपुलेशन पे ऑर्डर आ रहा है. सो जहां तक मैनिपुलेशन का सवाल है, क्योंकि इन छोटी कंपनियों में मैनिपुलेशन इज इजियर, दैट वी ऑल, कंपनी छोटी है, the amount of money it takes to manipulate these stocks is low. So वो हमारा सर्वेलेंस का काम है, हमारा और एक्सचेंजेस का. लेकिन हम छोटी कंपनीज को एक्सचेंज में वेलकम करते हैं, क्योंकि आगे बढ़ के छोटी कंपनियां ही बड़ी कंपनियां होती हैं. नोबडी इज बॉर्न बिग और वेरी फ्यू कंपनीज आर बॉर्न बिग. स्मॉल कंपनीज बिकम मिड साइज एंड मिड साइज बिकम लार्ज साइज. सो आई डोंट थिंक दैट फंडामेंटली हमें उनसे कोई तकलीफ है. अगर मैनिपुलेशन हो रहा है तो हम सर्वेलेंस एक्शन लेंगे. अब अगर वो रूल्स के हिसाब से नहीं बिहेव कर रहे, जैसे डिस्क्लोजर्स नहीं दे रहे हैं या फीस नहीं पे कर रहे हैं, तो वो कंपल्सरी डीलिस्टिंग में चला जाता है. अब हमें दिक्कत यही होती है कि कंपल्सरी डीलिस्टिंग में जो प्रमोटर हैं उनके साथ साथ जो इन्वेस्टर्स हैं वो भी सफर करते हैं, क्योंकि अब कंपल्सरी डीलिस्टिंग होगी तो उनका एग्जिट क्या रहेगा. लेकिन जनरली ये देखा जाता है कि अर्ली वार्निंग साइंस होते हैं, ऐसी कंपनीज के अर्ली वार्निंग साइंस होते हैं. ऐसा नहीं है कि अचानक से कोई कंपनी इस तरह से मतलब गायब हो जाती. तो अगर आप देख रहे हैं कि आज के दिन में जो सर्वेलेंस पॉपअप आता है, यू नो कि हमारे यहाँ जो बड़े ब्रोकर्स हैं वो जो पॉपअप देते हैं कस्टमर को, व्हाट डू वी कॉल इट, पॉपअप ओनली वी कॉल इट, कि अगर आपने वो सिंबल डाला तो उसमें आपको पॉपअप आता है कि इस कंपनी का जो ट्रेडिंग है इट्स अंडर सर्वेलेंस एक्शन, एएसएम, जीएसएम, व्हाटएवर. वो जो पॉपअप है हम उस पॉपअप को एनरिच करने जा रहे हैं. तो 6 और पैरामीटर्स हैं जो हम उसमें डालेंगे, जो एकदम फैक्चुअल डेटा, ऑब्जेक्टिव डेटा है, ताकि जो इन्वेस्टर है वो देख पाए कि इसमें इस कंपनी में क्या हो रहा है, उसका प्राइस टू अर्निंग रेशियो किस तरह से है, उसका कुछ और ग्रोथ कैसा है, लॉसेस है क्या है. तो उधर उसको वो इंफॉर्मेशन मिल जाएगी. अब वो इंफॉर्मेशन देख करके वो फिर भी वो स्टॉक खरीदना चाह रहा है तो इट्स फाइन, राइट, दैट्स हिज डिसीजन. और अगर वो उस इंफॉर्मेशन को देख के रीवैल्यूएट करता है अपनी डिसीजन, दैट्स आल्सो फाइन. सो हमें ऐसा लगता है कि हमें इन्वेस्टर को एकदम इक्विप करना चाहिए इंफॉर्मेशन के साथ, ताकि वो एक इन्फॉर्म डिसीजन ले ले. अब वो इन्फॉर्म डिसीजन वो किस डायरेक्शन में लेता है वो तो उसकी मर्जी. कौन सा? अच्छा, मुझे तो याद नहीं. इट वाज इन आवर एनुअल रिपोर्ट. थैंक यू. इनफैक्ट मैंने रिसेंटली रिव्यू भी किया था कि पिछले साल हमने क्या कहा था और हमने किया कि नहीं. No, not that one. Just got संगीत. नहीं नहीं, वो नहीं. मैं आपका पहला क्वेश्चन आंसर करने की कोशिश कर रही हूँ. Either way, along with the takeover and BIZ, same. That's just correct. Okay, now, sorry, what were you saying? हाँ. Oh, then maybe Manika's question was that are we changing that to 15% above floor price? So we should take a look at it. Okay, let's come back. Sorry, where were we? So we seem to have missed that KRA. So we will look at it again. Second question, IBC. So as you know, the IBC rules have been drafted. वो जो rules हैं वो इसी सोच से बनाए गए हैं कि जब एक कंपनी IBC में घुसती है तो बाकी सब कुछ गिर जाना चाहिए, क्योंकि नहीं तो वहां पे रेजोल्यूशन हो ही नहीं सकता. जैसे कि आपने कहा कि वो वैसे ही बेचारा थका हारा है, अब उसमें और क्या हो सकता है. So these penalties and even including जहाँ पे फर्ज करो उनके कोई violation है वो penalty है, they are always subject to the resolution plan of the IBC. So उसमें अगर वो waterfall में वो पैसा रहता है और वो penalty आ सकती है तो it is good, नहीं तो वो waterfall में नहीं आएगी तो नहीं आएगी. So the whole purpose of IBC is that the resolution committee, the resolution professional, the creditors committee will take that decision of the waterfall of payments.
Third है F&O का counter question है. Just second thought. कि F&O के लिए अपनी चर्चा करते हैं, लेकिन cash market में trading use करने के लिए, मतलब cash market investment के लिए हम क्या processes को और आसान कर सकते हैं, क्योंकि F&O trade करना तो आजकल सब किसी को समझ में आ जाता है और कुछ कर सकते हैं, और processes भी शायद trading corporations के ऐसे हैं कि वो facilitate करते हैं, लेकिन cash को क्या हम ऐसा manipulate करने के लिए सोच रहे हैं?
So cash में भी जैसा आप जानते हैं कि उसमें भी लगभग about 40% is intraday trading. तो ऐसा नहीं कि वो कोई long term holding है. 40% of cash segment trading is intraday trading. बाकी रहा 60%. We would be very, very keen to, I would say, facilitate, encourage people not only to take delivery but to be long-term investors. I must admit कि हमें कुछ ऐसी recommendations आई नहीं हैं on. हाँ, you're right. T+0 is a good way of saying कि मतलब आपने आज खरीदा आज ही हो गया, आज बेचा आज ही हो गया. We see that as a good encouragement for cash delivery. हाँ, I'll just come to that. So also ASBA in secondary market कि आपका पैसा अपने ही अकाउंट में रुक रहा है और फिर जब डिलीवरी देने का टाइम आएगा या कैश पेन का टाइम आएगा उस टाइम पे जाएगा. So I think they have been making efforts. That's more from a risk mitigation perspective. So, but हमारी कोशिश तो बहुत उसमें रहेगी. If there are any recommendations that your viewers or anybody gives, we would be very happy to look at it. Now the question of T+0. So, हाँ,
जो feedback है मुझे कहता है कि like मुझे just रिसर्च करना है उसका मार्जिन ट्रेडिंग कॉर्पोरेशन मुझे दे देगा मैं एक खरीदता एक बेच कर दूसरा खरीदता हूँ लेकिन कैश में ऐसा नहीं होता मुझे अपफ्रंट पूरा देना है भले ही पे करता है उसके बाद ही देना है पे के बाद ही पेमेंट करना पड़ता है इन वे ये डिसइंसेंटिव है कैश के लिए
मार्जिन की आप बात कर रहे हैं?
Yes.
Let's review it. I have no problem. Let's review
In
it.
fact, it was a plan. We'll review it.
We'll review it.
So the double that you're saying, margin bhi diya hai and the pain bhi karna padega. That anyway it was a plan to be reviewed.
In a way ये picture में easy है मतलब benefits में easy है और cash में different है
But think
But
of it
you
this
know,
way.
actually, I'm surprised आप ये कह रहे हैं because हम दूसरी तरफ से हमने डेटा देखा है कि actually जो retail investor है for delivery trades, he does pre-funding. 98%, 98 or 97% of retail individuals who purchase shares do early pay. So वो margin की बात ही नहीं. और अब आप देखें कि जब ऑलरेडी हमारा साइकिल T+1 है और हम अब T+0 के एक्सपेरिमेंट कर रहे हैं तो इसमें तो कहाँ मार्जिन कहाँ पेन एक ही बात हो रही. So to us, but however, should there be any benefit in that? हम तो बहुत ही keen हैं because we would like to encourage it. But as I said, right now most of the people are doing early pay. 95% are doing early pay.
Small tickets.
Retail investors, huh? हाँ.
one last question पहले ये होता था कि जो भी कोई बड़े इफेक्ट हैं उसके लिए एडिशनल प्रिपरेशंस होती थी लाइक हमने कोविड के टाइम पे देखा था कोविड के टाइम पे 2020 तो एडिशनल मेजर्स लिए गए एक बड़ा इवेंट लेकिन एक इवेंट लास्ट ईयर जनवरी में हुआ अनएक्सपेक्टेड इवेंट था और फिर इलेक्शन में गए तो इस टाइम पर इस तरह के कुछ मेजर्स क्या सोचे जा सकते थे कि वोलेटिलिटी को हम रोक पाए या हम इसको चाहते हैं कि जैसा मार्केट चाहे वैसा
कुछ दिक्कत हुई एक भी डिफॉल्ट नहीं हुआ पूरा सेटलमेंट आराम से हुआ मुझे तो आई हैव नॉट हर्ड ऑफ अ सिंगल डिफॉल्ट पूरा सेटलमेंट आराम से गया उसमें अरे रेगुलेटर का काम नहीं है बॉस आप क्या बोल रहे हैं
And all the cautionary letters were sent to the exchanges and they had kept the investors informed.
और जहां तक मेरी जानकारी है कुछ जो ब्रोकर्स हैं उन्होंने मार्जिन रिक्वायरमेंट अपने क्लाइंट्स पे बढ़ाया था इन एक्सपेक्टेशन कि अगर वॉलेटिलिटी हो तो मार्जिन कम नहीं पड़ना चाहिए सो देयर वर सम ब्रोकर्स हु हैड डन दैट एंड दैट इज देयर डिस्क्रिशन सो एज यू नो हमारे यहाँ हम लोग मार्जिन करते हैं बेसिस सर्टेन स्टैटिस्टिकल कैलकुलेशंस और जो व्हाट वी कॉल द टेल रिस्क कि कुछ बहुत ही एक्सट्रीम सिचुएशन हो गया उसके लिए हम सेटलमेंट गारंटी फंड रखते हैं उसमें से कभी पैसा लेने की जरूरत नहीं पड़ी सो आई थिंक आवर सिस्टम इज वेरी वेरी रिजिलियंट तो कुछ सॉरी yes I think we are reviewing that as well that's part of the whole thing of जैसे कि मैंने कहा earlier कि हम क्या क्या देख रहे हैं तो रिस्क मैनेजमेंट में वो भी आता है कि सेटलमेंट गारंटी फंड का की जो मेथोडोलॉजी है और जो क्वांटम है और प्रोसेस है वो सही है नहीं है तो ऑल ऑफ दैट हैज बीन गिवन टू द एक्सपर्ट कमिटी टू एग्जामिन हाँ जी T+0 अब उनको मेरा जवाब देने दे सो T+0 our observation has been that because it was optional number one number two it was in beta mode and was therefore for a restricted number of stocks and also we had also given an indication of a roadmap of wanting to progress towards instantaneous settlement subject to all approvals etc from our board and so on so the overall sense we get from the market is that they would like to really wait and see until this is really a more lasting phenomenon in the market and then really make the investment of educating investors the investment in the systems etc is really not very much but it is an investment in educating investors so our understanding from the market is that they would like to see a little more clarity before they make this investment in terms of educating their investors also it's a reality that there is an inherent conflict of interest because when things moved from T plus 2 to T plus 1, T plus 1 to optional T plus 0, the float in the system reduces. When the float in the system reduces, the brokers make less money. So, and the custodians. So, therefore, there is an inherent conflict of interest where the intermediaries would perhaps not be commercially very keen to make this offering. So, when it becomes a competitive requirement to say, my competitor is offering it and the customers seem to like it and I should also offer it, this is how markets evolve. So we will wait and see as to how this whole thing moves. We are actually extremely pleased with what has happened so far because two things have happened. Number one, the technology has been tested, and we know that the whole process goes through pretty seamlessly, albeit with very low volumes, but we know that the whole process works. The second thing that we are very pleased about is that the entire global ecosystem now it's very credible for them that India can move to a T plus 0. Okay, and therefore the quality of discussion and dialogue and very constructive discussions on how even foreign investors can participate in a T plus 0 scenario has been very, very encouraging. So I think that both of these objectives of gaining this trust of the system and being able to demonstrate as a proof of concept that this is what our ecosystem can deliver, that has been more than adequately demonstrated. But as in any major reform, and we've seen this right through the history of the capital markets, whether it was DMAT, when DMAT was optional, it was the best thing possible for the market, but was it taken up? No. Right? Why? Partly inertia, partly this whole investor education, partly conflict of interest, so many factors act. And then slowly the regulator has to bring in and say, okay, for these kind of scripts you must do, then for these kind of scripts you must do, then 100% you must do, then we won't have transfers other than DMAT mode. So it's always a gradual path to reform. And that is what, we should, we should look at, because we don't like giving jhatkas to the market.
So now are you looking at like a block deal window, which is out before the market, to go into T plus 0 earlier and
What
then
are the next steps?
next step?
We stay at this task level for a long
Yeah.
time, or how many more months?
Just push the instantaneous target that we're looking up for the next year.
The honest answer is we're still internally deliberating. So
What are you
Will
doing?
it to go to T plus 0 or?
we are deliberate. So it would be inappropriate for us to say anything else at this stage. All I can say is that we wanted T plus 0 to be a stepping stone along a certain evolution and a certain path. We have achieved what we needed to on that front, which we are delighted about. But adoption is always a slow adoption when it is voluntary. And particularly in the current context where we did not give the market complete clarity. As I said, we launched only a beta version. We had only 25 stocks. We said that there is a roadmap down the line. So given all of this, I think that we need to first deliberate and make up our minds a little bit more on what is best and what is optimal for the markets.
Are you suggesting that you might in fact, because at more than one instance, you very, very emphatically said that, whatever the time taken, you would like to move to instant settlement.
Yes, that's right.
Has your mind changed on that based on whatever evidence you might have seen?
You see, Menika, no. That is, in the test, as I said, only two things got proven. One was that the technology works. The other is that there is interest from the foreign investors. Those are the two things that gotten proved. Nothing else got proved. So, and of course, what got proved is that optional, particularly if there's conflict of interest, will not get traction. Right? That anyway we knew. It was not a surprise to us. So the question is not that. The question is, what is the combination of settlement cycles which is optimal for the market? We are debating, we are deliberating, we have lots of inputs from lots of people, and we think that we would like to think through that very, very carefully, because as I said, we want to give clarity to the market. Because right now, unless we give clarity, we can't expect them to invest in that investor education.
So you haven't changed your mind on moving to instant settlement. The load and the time taken.
I've said what I wanted to say.
Now what happens?
Thank you. Ma'am, this fixed price option is only deal.
I can hear you, but what happens is in the recording, then nobody knows what question I'm answering.
No problem. This fixed price mechanism will make the RPP return. No companies will opt for reverse compensation, given the fact that they have a fixed price option. And this actually takes the power away from the investor, but you have specified your rationale. But I also want to ask you, what is the sacrosanct of 15%? Why not 20%? Why not 20%?
So, two answers. The first is you seem to have a difference of opinion with Menika. She thinks it's not going to do well at all, and it's completely pointless. She sees no reason for it to succeed. So, whereas you see no reason why anyone should do reverse book building, our job is to give options to the market, and people will choose what works for them. Okay, so right. Now, secondly, I think I would completely disagree with your assertion that it takes the power away from retail, from investors. That's a categorical no, because the threshold of that they have to reach of 90% remains untouched, and therefore the power lies in the hands of the investor as to whether they want to come in. And it doesn't matter. If you don't like the price, you don't surrender your shares. So the power continues to remain. So we strongly disagree with your assertion. Number three, why 15? As I said, we analyzed the data of the past delistings, the successful ones, the not successful ones, the ones which had liquid, frequently traded, not frequently traded. All of those aspects were presented to the board and analyzed in depth. And after those deliberations, this number of 15% was reached.
Now, there were reports that were contributed or have the positive submissions of regulating cryptocurrencies. And anything on that? There were reports that strongly suggesting that such submissions have been made from Sebi side.
Well above my pay grade.
Oh, but if you have made recommendations.
Well above my pay grade.
इसमें आपको कहा क्या था कि आप देखें इसका रेगुलेशन
किसका?
आपने कहा या नहीं कहा उसका सरकार ने आपको
इस मामले में बात ही करना is well above my pay grade. Bhaiya, we talk about the capital markets. Currently, crypto is not a part of the capital markets. So it is well above my pay grade. The answer to that is well above my pay grade. That answer is well above my pay grade. Chali, next. Chali, next.
मैम आपने एक आइडिया दिया था कि आईपीओ अलॉटमेंट के बाद यानी लिस्टिंग से पहले ट्रेडिंग
हाँ
एक आपने बात करी थी
हाँ बात
उस पर कुछ फर्दर आपने डेलीब्रेशन किया है पॉसिबल है या
so उसको आपकी डिमांड्स काफी तेज हैं. हम आज बोलते हैं, आप समझते हैं कल पॉलिसी आ जाएगी. It is part of the KRAs of that team for this year to examine the matter. So is it desirable, not desirable, how to implement, not to implement, all of that will be deliberated. इस साल का KRA है.
Ma'am, you also said that you kept us busy with certain market manipulation orders. Just wanted to know, are we expected to be kept busy?
देखिए, मैं एक ही चीज कहूंगी, that I think what the market is slowly beginning to understand is that Sebi now has tremendous technology, and what earlier was not was would I would say was difficult to catch. It has now become reasonably easy for us to catch, and our bright young officers, the way in which they have, and this is all in-house, okay, so there is no external consultant or advisor or anybody. We really have created absolutely, path-breaking, pioneering work on this. So all our officers have really done fantastic work, and I think the market is now understanding that the technology that SEBI has been deploying is very powerful now, and they really need to understand that in today's world, they leave a digital trail of everything. So, for them to believe that they can get away with murder, it just won't happen anymore because the digital trail is so strong. So, I think what you are seeing is a manifestation of this strength of technology of SEBI that's coming to the fore. And so, you know, I would only say that people should think very carefully before indulging in mischief, because now there's nowhere to hide. The data just speaks and the digital trail is just there. So they should think very, very carefully.
And actually, if we were any window possibly in that case where we could avoid investigation.
Sorry, say again.
In one of the cases, a congregate case, did give them what I would regulator to investigate. So, is there any possibility that these were digital or other mechanism that we're using now? Any window of possibility or was there?
So, as you know, we don't talk about case specific matters. I will only say that the digital trails that are within the boundaries of our country, we have full access to, and therefore there is no place to hide.
Well, I'm sorry, I can anticipate what your response will be, but the question deserves to be asked. What is the nature of infraction or violation that you're investigating at constitutional court?
You all are writing about it.
We don't know.
We never talk about entity specific, you know that.
Yes, of course, but the question still needed to be asked,
Yeah,
given
yeah.
what is
Sure,
happening.
sure, sure.
I want to go back to the working group on risk and investor protection in the FM market. And whilst I understand you've given them a very wide mandate, I would still like to get the regulator's perspective on this.
You'll see that in due course, Milka. Why do we want to double guess? When we put an expert committee in place, why do we want to double guess what they're going to do?
The expert committee may add to your views, but there might be existing views already within the regulator, right?
We are completely open minded. Our job is to present the data and to present to the committee multitude, long list of various options. And it is for them to deliberate the pros and cons and make a recommendation to us. So we don't double guess our committees. I mean, they're the experts. It would be wrong for us to, we get our strength and our understanding of the market from what we learn from these committees. That it would be foolish on our part to double guess them and have some preconceived notions.
Not one last question. We have also been very positive about fractional shares using that we have to market. Any hope on the handle or anything that is interested in that?
So we had shared last time that we have requested, because the Companies Act is under deliberation, so we have requested the ministry. So let's see what comes out from there.
And I just want to understand something on the SME market as well. Of course, we've seen the kind of subscription numbers and they haven't changed. And that does pose a point of concern also in terms of things, not entirely, but to some extent, what might be behind those subscription numbers. I mean, over the next 3 months, 4 months, could we expect a lot of movement on sort of, ensuring that there is no wrong business which goes behind subscription numbers and those IPOs come closer to the rate of before IPOs or subscription growth with exchanges by listed?
I think there are two different questions embedded in your question. One is in terms of how the IPO process runs. Now, that IPO process, as you know, last time we had shared that we have observed cases of inflation of the book during the open period of the IPO. And we've already taken measures, I think about half a dozen measures, Mr. Bhatia, on controlling that, so that willful cancellation of applications doesn't happen. And so only applications that are executable and valid are the ones that will show up in the live data of the exchanges. So that is an important set of initiatives we've already done. I think it's due to come into effect from July. Is that so? We've already intimated, but I think the date for implementation, because again systems etc. need to be built, I think it is July. Yeah, July 2024. So we already issued the directions on May 22nd of this year, and they will come into effect in July. I don't know. It says July. Maybe our team can tell us. So, so, so I think that in terms of making sure that investors are not misled about the real demand for the IPOs, we've taken what we believe should be effective steps. If we find a new modus operandi, you know, it's a cat and mouse game. So, कुछ नया चूहा निकलेगा तो एक नई बिल्ली आएगी. So we will have to figure that out along the way. Now, as far as the manipulation of those prices, clearly we have seen, and you have seen, you know, the data is very compelling. There are at least a dozen companies where the post IPO, you know, run up of the share price is stratospheric, right? There's no other word for it. It is stratospheric. As you know, at Sebi, we have already made this observation that investors need to be careful, and that these are companies who have who are small. The capital is small, the share price, the free float is small, the risk of manipulation is high. We've already made that statement before. Now, within all of this ecosystem, we are certainly looking at, you know, where is it that there is mischief and wrongdoing. And you've already seen a couple of orders which has come from our side. So if we discover more things, we will issue orders. So, you know, these are things which happen in the market. We have one merchant banker who handled some half a dozen IPOs, I think, who was submitting fraudulent auditor certificates. So we will take action. So these are all part and parcel of, you know, the process. So we will take action as and when that is required.
Are you looking at increasing compliances for these companies if they cross a certain threshold of market cap?
So we haven't articulated anything of that nature, but yeah, that's right. The segment as a whole we're looking at, but nothing specific at the moment. That's right.
That was for you.
That was ease of doing business.
So on action for sort of review of whether it's SME IPO guidelines or IPO market, how many working groups are currently examining SEBI regulations?
It doesn't work that way. It works, since the focus is ease of doing business. So under each of the standing committees, so let's say under primary market advisory committee, under secondary market advisory committee, whatever is a pain point for industry, because those working groups are meant to focus on what will help the industry. So therefore, it's horses for courses. So those groups are focusing on ease of doing business for them. So in that context, their recommendations may have nothing to do with all of this.
Recently हमने ऑब्जर्व किया है कि जो एमआईआई को एक्सेप्ट करते ही नहीं है कि टेक्निकल ग्लिच हुआ है, खासतौर पर वो जब प्री सेशन में हुआ, प्री सेशन में दो इंसिडेंट्स तो काफी आए थे, और दोनों ही कंपनियों ने अपनी जो इन्वेस्टमेंट फर्म को ट्रांसफर किया, वहाँ पे सवाल पूछे, उन्होंने कहा कि हुआ ही नहीं। तो टेक्निकलिटी लोग जानना चाहते हैं कि प्री सेशन था, जिसपे टेक्निकल ग्लिच नहीं, और एक ट्रेनिंग कॉर्पोरेशन जिसके नाम से काफी पूरा एक जगह जाके ट्रेनिंग शुरू हुआ था, वो भी कहता है कि टेक्निकल ग्लिच नहीं। तो क्या टेक्निकल ग्लिच की जो डेफिनेशन है, उसको रिव्यू करने की जरूरत लगती है आपको? पहला सवाल। दूसरा सवाल, एक म्यूचुअल फंड से बड़ा प्लेटफॉर्म है, उसके यहाँ पे दिक्कत हुई, और उसने कहा कि हमारा जो पेमेंट एग्रीगेटर था, उसके यहाँ से प्रॉब्लम हुई। अल्टीमेटली सबका इन्वेस्टर का पैसा आप ये कह सकते हैं कि वो जो पेमेंट एग्रीगेटर है वो हमारे रेगुलेटरी डोमेन में नहीं है। तो इसका सोल्यूशन क्या कुछ सोचा जा सकता है?
सो पहली बात, यू नो, ये हमारी मार्केट में काफ़ी आम बात है कि टेक्निकल बेसिस पे बाल की खाल निकालना और कहना कि ये तो कुछ प्रॉब्लम हुई नहीं, काफ़ी आम बात है। एमआईआई से ऐसी उम्मीद नहीं होती है। देखिए, बाकी मार्केट में कोई भी ऐसा कहे, लेकिन एमआईआईज हु आर द फर्स्ट लेवल रेगुलेटर, दे शुड बी रिस्पेक्टिंग द स्पिरिट ऑफ द लॉ, लेटर ऑफ द लॉ, एवरीथिंग। So उनसे ये उम्मीद नहीं होती है. So we are certainly taking it up with their public interest directors and all of that ecosystem to say that taking shelter under technicalities is not a good thing. Everybody understands, you are yourself a first level regulator, कि इसका मतलब क्या है. And therefore, is there something that we need to do about that? I think in terms of sensitization, first of all, definitely. And if that doesn't work and we need to change something, we will. So, क्योंकि ये उम्मीद उनसे नहीं होनी, ऐसा नहीं होना चाहिए. The second thing is, sorry, what was the second? हाँ, sorry. हाँ, अब देखिए जो पूरा इकोसिस्टम है वो एक दूसरे पे निर्भर है, ठीक है ना. सो अब अगर जो कि पेमेंट एग्रीगेटर जो था रेजर पे, उनके यहाँ प्रॉब्लम थी, तो सेबी उसमें दखल अंदाज नहीं कर सकता. हम क्या कर सकते हैं, हम आरबीआई के साथ बात कर सकते हैं कि देखिए ये दूसरी बार हुआ है कि रेजर पे के साथ हमें दिक्कत आई है. सो उस बेसिस पे थ्रू रेगुलेटरी इंटरैक्शन एंड सो ऑन वी कैन डिस्कस एंड वी कैन हैव दैट कॉन्वर्सेशन. But finally, we trust each other, like you have a concept of a trusted server. All regulators trust each other. So we cannot and should not interfere in what is their regulatory domain. But yes, was there a problem? There was. Was it on account of the payment aggregator? As per our latest information, the problem was at their end, at the payment aggregator. We are now quite late.
वहाँ से गयाना से वो कह रहे हैं कि मैच सेमीफाइनल मैच तभी स्टार्ट होगा जब सेबी की तो अगर आप मैच देखना चाहते हैं तो इसको आप विराम कीजिए.
चलिए, last question. Mahalakshmi has been very quiet all evening.
You articulated very beautifully, ma'am, on your concerns on the FNO side. I'll partly, pretty much answer. I think the working committee is supposed to just come up with, what is to be done, and that's the question taking up the committee has taken up. It's fine. My question is, how open, in your mind, if we have a 30-40% drop in turnover, will that be seen as regressive for our system?
We are completely open, Mahalakshmi. We are now, it's very simple. In all of SEBI, whether you ask the officer who has just come 3 months ago or you ask a whole-time member, data and rationale. उसके आगे हम ना तो कुछ सोचते हैं, nor do we think it is appropriate, because then it becomes a matter of opinion. My opinion, your opinion. So we are completely open to everything. And we will look at everything, all options, everything very, very dispassionately. If something is required, we will do it. If it is not required, we will not do it. We have no preconceived notions on this.
You will be open to taking away some products off the shelf.
If that's what's required, and that is what the considered view of the committee, and we agree with the rationale, logic, and everything, why not? After all, as the point was made, no, you see.
One is this step, the other one is on course. So these have financial implications.
Oh yes, of course. So there is always, as you know, in any business, there is a regulatory risk. You ask the pharma companies, what is regulatory risk, right? So in this business, it is ask bankers, what is regulatory risk, right? So regulatory risk is a reality and a part of doing business. And any investors who are there need to be conscious that there can always be regulatory risk. And I think the market ecosystem is actually very mature. We know that a leading broker had spoken about this and said that, regulatory changes do affect our business models. That is absolutely correct. And it is so worldwide. It is not peculiar to India. And it is true for all sectors, not just to the capital markets. So wherever there is regulation, there is regulatory risk. Okay, so we shall wind.
The other thing that AIs may be allowed to borrow for a period of up to 30 days to draw down shortfalls. As as well as there is an RBI unrestricted investment banks investments there also. So will this help that on one part also, who will they borrow from investors only? Can they borrow from NBFCs?
We are neutral to all that. As I said, we don't delve into areas which are not in our jurisdiction. So where will they borrow from? We don't worry. Whoever gives them money, our concern is the cost of that borrowing should be borne by the relevant person and not be diffused across other investors. That's our simple logic, and it should be for a short term, no more than 30 days, and then you have a cooling off period. Otherwise, it was possible for people to do 30, 30, 30 and interpret our regulation as though you can do it 3 times continuously for 90 days. So we've taken away that ambiguity now. We've said, no, you have a cooling off period. So then per force, people have to bring in their money. And also if they are now going to be charged interest on it, there is no motivation left for them to try and delay their contribution. So it has nothing to do with any other circular. This is a very simple proposal to ensure equal treatment to all investors when the time comes for them to honor their commitment.
Last question. I just want to ask you, there was a circular sometime back on saying that stock exchanges should not share real-time data with the game platform. What was the thought process behind that? One of the things which stock exchange people told us was that it's very easy to scrape data actually from the website. So it remains a challenge for them. So what exactly was the thinking behind saying
But
that?
there are many technologies which will block a scraper today. If the exchanges are claiming that they cannot stop a person from scraping their websites, I would seriously question their technological capability. Even a non-IT person like me knows and understands that you can configure your website so that people cannot scrape beyond a point, because you detect that somebody is continuously scraping, you block that IP or you block that this thing. It's very easy to stop. So I don't understand that question.
No, the point that in circular you said that exchanges should not share.
No. So are you asking a question that the regulation is ineffective, or are you asking why the regulation came? Because the regulation, if the exchanges, please check, if the exchanges are claiming that we have no control and people will scrape our website and take live data, I would seriously like to question the CTO. Please set up a meeting, Anand. So that's simply wrong. Okay, even a fool like me knows that. Okay, so that's just false. So let's go away from that. The question of saying why was that circular required, the answer is very simple. That what is it that if people who are saying that they are doing investor education, they can work with a feed which has a lag. Right? If you're teaching someone how to operate in the stock market, you can teach them with lagged data. Why do you need real-time data? You need real-time data if only you want to run an exchange which is not regulated. You want to do dabba trading, right? So you can call it whatever fancy names you like, but if you're facilitating trading in securities through a live feed from the exchanges, then how can it be permitted? It's illegal. Yeah? If you want to facilitate trading, please come and get yourself registered with us, no problem. Kamlesh needs to go watch the cricket match. Thank you very much.
Toss is going to happen in 5 minutes.
Thank you very much.
Classifies themselves as a promoter, but they at the same time